Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, welcome to this week's edition of our market recap and recommendations. Last week was a doozy on the bean market. Man, I think I got some white hairs I didn't have after last week, but all the same, it's Christmas Eve. Let's get this out and work around the holidays a bit, getting this out bright and early. So first things first, let's start with the recommendations. Let me get the screen up here. All right, so the first thing we want to do is we're coming into the last week. I kind of wish it weren't this way, but we don't have very much choice but to move the remainder of our quarter 4 bushels. So that's going to be our focus. We're going to sell the remainder of our quarter 4 corn bushels, 30%. We're going to sell the remainder of our quarter 4 soybean bushels. Notice there is no recommendation to re-own those at this time. I'll get a little bit more into that just down the road, but we've already recommended taking profits on some re-ownership of corn. And if we were to get this corn breaking through the 200 day, it could really go. So the exposure that we still have, that 35% long that we still have on the corn market, I would kind of like to hold on to that. If corn falls down, maybe we'll re-own it at a later date. Soybeans we re-owned, and then last week was difficult, right? We were underwater there from our recommendations of re-ownership. We've come up a big part of the way, not quite all the way, we've come up a big part of the way. So I'm not excited about adding to that re-ownership position just in case beans can't get up off the mat. And so I don't want to have 100% exposure there on the re-ownership. So we already have re-ownership. So for that reason, it's just a simple sale. More excited about selling corn than selling beans in here, but the calendar's saying we got to be done with quarter 4 bushels. And that brings me to our third recommendation, which is we're going to sell 10% of quarter 1 corn. And I'll show you on a chart in just a little bit where we're at on that. But you can see that we are up at a resistance level on the corn, and I think starting to average in to some of those quarter 1 sales makes sense here. The next thing I wanted to share with you is soybean pictures. We have pictures from a customer in Brazil. This is in the state of Paraná. And there's kind of two pictures there. You can see in one of them, the beans seem to be struggling a little bit more, and the other one, the beans look better. And I wanted to show that for two reasons. Reason number one is just to kind of gauge the development of at least Western Paraná, just kind of see where the beans are. We'll go over the actual official report, so to speak, the official weekly report of the developmental phases. But the other one is to say,
yes, it is a monster crop. It is expected to be a monster crop. There's already some spots that aren't perfect, like there are always every year. And there's plenty of rain forecasted in all of the central and northern part of Brazil. And there has been plenty of rain from north to south and including Argentina. If we look at the 4 to 7 day forecast, it is a little dry in southern Brazil and in Argentina. So this is not yet a weather story, but we'll be coming through the holidays, 4 to 7 days. If they don't get that rainfall, we might say, hey, they really need rain. Is there more rain forecasted? So not a weather story yet, but there's plenty of rain everywhere. There is rain forecasted in the north. There is not rain forecasted in the southern part of Brazil, and also that would include parts of Paraguay and most of Argentina. Which brings me to the next chart that I wanted to share with you, which is just, this shows the, this just shows that where the Brazilian crop is developmentally. And this gives us a good idea. Let me pull this over here to the side. So there we go. Maybe it's a blue marker. So this 41% here, this is vegetative development. And then the gray is flowering. And then the yellow is filling pods. So we have over 55% that is either flowering or filling pods. And I would say that that is in weather risk. And then we've got another 41% that will be flowering soon. It's safe to say that over the next few weeks, we will see maybe over 50% of Brazil's soybean crop going through the flowering phase, which has to do with yield potential. And then we still have the filling pod phase, which can also affect yield. This, by no stretch of the imagination am I saying I'm super bullish beans, so don't misinterpret that. But all the headlines are bearish. And so if we get a new headline, what will it be? And I'm just saying maybe not enough rain in the southern part of Brazil and in Argentina. The other thing is most of Brazil's crop is going to be flowering or filling pods in January. And this isn't particularly unusual, but it is, since planting was so fast and seamless, we do have a large percentage of the crop going through the same developmental phase at the same time, and it is a vulnerable developmental phase of the soybean. So if the rain were to turn off, is it still possible to have yield reduction in Brazil? And the answer is yes. There is still weather. There is still the possibility of a weather scare. I remember, I believe it was 2023, when in May, the crop in the US looked great. And then all of a sudden, we got like 10 days of dry weather. And then we got that spike in May. That's when we quickly went up to like $14 beans, $6 corn. And then it rained and it came back down. All I'm saying is finicky things happen in markets. And if we were to stream together 10 days of dry weather in southern Brazil, is it possible we get a spike in soybeans? Yeah, I think it's possible, right? So nothing to be overly bullish about, but it is something to keep an eye on. And that brings us to the next point, where we always just want to look at that pyramid. And the pyramid, it always starts with a market plan portfolio. If you and I have worked together, you know exactly what I mean by quarter 4 bushels, quarter 1 bushels. You know exactly what that portfolio looks like in your farm. We've worked together, and that's a specific number, so you know exactly what we're talking about. Then we're going to look at seasonals, technicals, the position of the funds. That's what we're going to do next. And then finally, that call to action. I always start with a call to action. If you're busy and all you can do is watch the first few minutes of the video and you want to know what to do, fine. I leave the rest of the video in because you might have questions and you want to get that clarity. But I'm always biased towards action. That comes from farming myself. What do I need to do? And if I'm okay with that, great. If not, if you need to convince me, then I'll watch on, right? but I was a guy buying a tractor. I kind of wanted to know why it worked the way it worked, but I really just wanted to know what's the output. How fast can I plant? What's going to be, whatever, if you're buying a planter, what's the seed placement, just how does it work? So that's the bias towards action. And we already got the action out of the front, out front. So now let's just quickly talk about the position of the funds and of just some chart analysis. We're going to start with soybeans. Last week was really scary for soybeans. Let me just pull it up here. And it was scary for a couple of reasons. I'll talk about the technical reason in just a little bit. But if you want to think about where is this position of the funds going, we've seen it trade a lot of the year way down here, maxed out here in mid-July. And then we've seen it try to get almost neutral a couple of times, but it's hovered right around in here most of the time. So let me get that out. So where is it going? And I'm actually going to get a red here because this is what's scary. If you read this as dry powder where spec funds can sell this off, that people that believe that's who's talking about the $8 corn, right? We're going to see an 8 in front of corn because these spec funds are going to sell. So when we lost support last week and the prices fell, that is scary, right? That there's no way around it. If beans are going to go down, that is scary. Having said that, and let me back out of this, right around in here is where, traditionally speaking, spec funds, if at this level, they're overbought. So they don't like to spend much time below that. This year was a major exception, and maybe it's a new normal, but traditionally speaking, and even if you look since October, every time they get right around in here, they don't get too excited about selling more. So the other side of the argument is saying these spec funds, they're not going to sell much more than they already have. They've knocked it from 10 to, they've knocked it down from 14 to 950. That was the heavy speculation. Now we're in range bound trade and we're at the lower end of that range and they're not too excited about selling more. That's the optimistic view. What do we know from a pricing standpoint? Now I'm going to switch over to the actual, this is the trading view. I like their analysis tools. Handy, easy to use. Let's be able to mark this one up as well. Maybe we get a blue for it. Okay. What was scary? This is the July contract. This had been the support and it had held. And then we this is the, if you look at the January where I drew the blue line, basically that was the same, but we got comfortable kind of under this line and we were sideways. And right in here is where the recommendation to reown was, right? And then we just absolutely took out all support and this came down and then it's trying to come back up. But the issue that we face now is this 20-day mover is coming down. And we have struggled to stay above the 20-day mover. So if this is going to go is it going to go down? Again, that's the question. The flip side of that, or the optimist, is to say, okay, but if we could get above this, then we had a run up to here, we had a run up to here, we could even have a run up maybe all the way to here, and that could happen. And that's the thing about technical trading and just trading in general. We don't know the future. Wish we did. It probably, some of what I just now described depends. Will it rain? And, are we going to get 10, 15 days of dry weather? Is demand going to stay strong? Are we going to get headlines on tariffs? We don't really know what's going to happen, if this is going to fail or if it's going to make another run up at one of these resistance levels, right? Whether it's here or the 200-day. So that's the big unknown with beans. In the midst of that unknown, the way that we're handling it, and like I said, I'm always biased towards decision. We're saying, okay, as much as I hate it, calendar's telling us to sell, we're going to sell this. last 30%. If this thing gets destroyed, there is going to be some beans that are just sold. Horrible price, not happy about it, but they're sold. But we still have most of the eggs in our basket. You know, we're re-owned around here on our quarter 4 bushels, and also the other ones. Those I've only made recommendations on sales. Most of those are still positioned to where if we were to get up over here and make a run at some type of resistance level, then we would, you know, we would be doing better. So that's the rationale on the beans. And this just, it should show just the way we feel, or I feel about, let me adjust that. It's my opinion that the best results, and this is after working with hundreds of farms in the US and hundreds of farms in Brazil, the best approach to grain sales is to build a solid portfolio, just like we said, understand cash needs, storage needs, your ability to hold it. And once you have that portfolio, manage within that portfolio, because what makes a difference is making good decisions, not necessarily knowing the future. Nobody knows the future. So getting all the markets right, that it's not possible. Making solid decisions within each portfolio, very doable. So that's where we're at, and it won't always pan out, but that's the nature of the beast. That's the nature of what we do. Okay, let's shift gears to corn. All right, corn. Corn's kind of the flip side of the story, which is really interesting to me, and I think this is going to be maybe if we don't get a weather scare, what I'm about to say now is probably the best story. So this is what I want to point out on the corn. Just look at how we are. We've had spec funds have been buying corn. They've been long corn really all of November and December, basically. And they reached the max last week or 2 weeks ago, I guess I should say. And then last week's report, last Friday's report, they backed off, but it's still the second highest long level. So what we're seeing is friendly corn, you know, bullish corn, bearish beans, so to speak. And the ratio, if you divide the price of beans by the price of corn, that would favor planting more corn acres and less bean acres. In that ratio, last week, it got to the widest level. That might still be true, but it's near the widest level that it's been in years. So it is friendlier to plant corn than beans. That price ratio is at the widest level it's been in years. That for me is a very interesting story. There's farmers that say there's nothing, I'm not going to change my rotation. I'm not going to guess prices. I get it. There's farmers that say, yeah, for the right price, I'll add a few corn acres or take away some bean acres. Regardless of actual farmer behavior, this is an important conversation from an anticipation standpoint, because markets kind of see it as their role to make sure that those things are in line enough to preserve enough corn and enough soybean production. And so this very likely, whether farmers actually change their behavior or not, this very likely will get this battle for acres flashing red lights more and more with each week that goes by. Usually that's a March story. It's looking like this year, this battle for acres conversation is going to get a little bit more attention and get attention sooner. And it's interesting. I mean, it should, right? That there's a major, we keep getting friendlier reports on the corn, but beans are bad. So will corn pull beans up, or will beans pull corn down? That's the question. And let's just look at the corn chart here. You'll notice that the corn is bumping up against, get it to where we can mark it up. Corn is bumping up. It tagged the 200-day once here, and it's getting really close to it. Decent shot it'll tag it again this week. If we get the 20-day moving average crossing the 200 moving day average to the upside, and if you remember the last week or two, I said that this was likely just the wedge that corn would trade in. It's just held that. Nothing really surprising. But if you get this 200-day moving average crossing the 20-day crossing the 200 to the upside, that uppercut, and then it trades here or trade there. That's what's called a golden cross. That is very, very friendly to markets. That's where we could maybe, well, I happen to draw 480 up there, but that's where we could maybe see some of those friendlier prices. It's because of that possibility that I want to hold on to our long position on corn that we have, that we re-owned in the Q4, and that's why we're still holding on to, not after this week, 90% of our Q1 and all of our Q2 and Q3 bushels, right? It's because we could get that other leg up there. That's friendly on corn. Having said that, if it fails, that's pretty bad. That's pretty weak. And I'm not saying this thing plummets, but if we fail here, if we trade up here and then, oh, I ran out of my marker. There we go. If we fail here, and then it goes down, and then this 20-day comes down, basically, we would probably see ourselves trading down to one of these technical support levels, and then it'll just kind of seesaw back and forth, and the calendar will change. We never get something excited. So the big question right now, will corn have enough strength to, at least sustain beans and maybe pull them up? Or will beans, it's just so bearish for beans that they're just going to fall and they're going to bring corn down. And in the midst of all that, we've got, will it or will it not be dry in South America? Will there or will there not be any type of trade arrangement or agreement with Bush coming into the White House that shakes up ag markets? Will there be geopolitical situations? So we're just trying to make decisions 1 week at a time. And for this week, the recommendations were what they were, right? We got to wrap up our Q4 bushels, and let's go ahead and take a stab on 10% of sales of the Q1 bushels. And that's it for this week. That's it. As a way of closing out, we'll just get kind of rehash the main talking points. All right. Okay, so here we go. Corn seasonally is neutral. Beans seasonally are a sell, but we've not had a weather scare, but it's still seasonally a sell. Managed money for corn, even though they are bought, they are not overbought, so it's neutral. Beans technically are oversold, so that would be a buy for beans. The trend for corn is up, and the trend for corn for beans is down. In a nutshell, that's what we're looking at. Let's get the audio here. Corn basis softened on corn Santa Claus rally. Soybean basis is stable and likely to rally if soybeans fall more. We've actually had demand for soybeans. The demand for soybeans has not been a bad issue. The question is, will this massive Brazilian crop, will this hit basis or will this hit futures? And we don't know. I think it's almost for sure going to hit their basis down there. It already has. Their basis already has started sliding. Will it? The basis in Brazil is doing what basis does, say, in August here in the US or September, where it goes from old crop to new crop basis, and over a short amount of time, it just absolutely falls off a cliff. That's what's starting to happen in Brazil. So if we were to get bad, a drought or something, maybe it would stabilize a little bit and then plummet. But they're probably going to lose anywhere from $1 to $3 on their basis, I would guess, in Brazil, depending on what region they're in and what happens to price action. Technical considerations. Corn is testing resistance and trying to break out upside. Soybeans have recovered from their lowest level since 2020, but are still in downtrend. Well, in a snapshot, that's it. A couple of questions. One question is, should I keep holding my soybean long positions? And that's always really hard. But in my mindset, the way I think about it, and this is just the way that this is the way that I think about it. The thought process is, I recommended July because chances are we're going to have some bumpy weather here. July gives us time to get through the battle for acres. It gives us time to get through any hardships in planting in the U.S. Historically, last year was not a normal year where we fall $4 and it never comes back. Historically speaking, most years, if you buy in close to the fall price, you at least have a chance at a break even sometime by the spring. So my thought is we just hold. It might be bumpy weather, but we're just going to stay July positions. We chose July to be able to be patient with them. That's my thought process, right? Get opportunities shorter term like we did on corn. We can always take those, but the extra time on the calendar is to be able to be patient with it. Still at this level, the spec funds are oversold, not compared to where they were in July, but compared to their historic levels. There's no weather scare. Everybody's expecting 170 million metric ton crop out of Brazil. Demand is strong. For me, it's possible we go down and get an 8 in front of beans. Absolutely, that would be a nightmare. But for me, when we chose July, when I recommended July, the idea is that this is a patient position. So for me, I'm treating it as that, and I don't. If I want a patient position, I don't want to be scared because a week later, 2 weeks later, a month later, I get a little bit spooked. I really work hard to not let fear be a deciding factor, finding the balance between not letting fear be a deciding factor and being stubborn. That's always a challenge, right? But that's where I'm at. That's a big question that I've had is, should I continue holding my long positions? I've had a lot of questions out of Brazil, but that's on exchange rate and whatnot. That really, most of coming into Christmas, bean positions is what I should do. And how weak can corn be? That's another doubt or question that I've had is, I really wish I knew. What I would say is that these price levels, we've seen basis soften, so cash prices haven't actually changed all that much, which is okay. Corn is friendlier than beans. There's still a lot of corn out there. So I think it's hard for us to think of those higher prices on corn. Speculators are buying corn for some reason, but I think if basis is going to give shorter term, it's hard for us to get too bullish on corn, because as soon as we get a little bit of a rally, well, that basis goes the other way. So that's a concern. All the same, appreciate you watching in. It's Christmas Eve. Merry Christmas. Markets are closed. Enjoy whoever you're spending Christmas with. And sometimes you just got to remember, it's just markets. It's just markets. So Merry Christmas. Hope you have a great week. We'll check in next week.